All right, fellow meme stockholders, XMAX Trading here. I'm going to go over some famous DD that came out in Reddit. Everyone's talking about it since it's the month of June already for AMC stocks. So subscribe to the channel if you haven't already. Hit the like button, leave a comment, and let's get started. So, why Executive Order 14032 will cause Moass, AMC to Moass, and institutions are scared of June 2022. So not financial advice, just some interesting DD that someone is pointing out. I know we want no dates, but we have a good reason why there might be a Moass in June, because of Executive Order 14032. Back in November 2020, Trump signed an executive order to sanction 30 Chinese military companies starting on 12:01 a.m. January 28, 2021. What happened on January 27th? Market makers, banks, and prime brokers lost their central collateral against short positions, which led to the first AMC running high in January. So there's no way to predict this. You're looking at this and like, boom, shoots up, right? From like $4 to $20. What happened the day before the peak? Executive Order 13959 amended to May 27th, starting in January 27th. This effectively gave back the collateral to market makers and prime brokers starting on the day of the peak, and combined with the buy button removal led AMC to drop from its January high before running again in May. So this pretty interesting. Day before the peak, this executive order came into effect. What happened on May 27th? The amended executive order once again took away collateral from market makers, banks, and prime brokers and caused them to margin call and buy into their short positions as they had no collateral required to maintain their margin, leading AMC to run again in May and hitting an all-time high of June 2nd, 2021. Wow, today's June 2nd as well, just a year ago. Seems like a long time. What happened the following day? Biden passed a new executive order on June 3rd. This gave back the collateral to the market makers, banks, and prime brokers for 365 days. What's different? They will lose their collateral again on an additional 70-plus military companies on top of the original 30 starting June 3rd at 12:01 a.m. That's tomorrow. You might be asking, why the hell are these executive order margin calls calling? Why are these executive orders margin calling these institutions and causing AMC to run? Well, many over-leveraged asset managers like BlackRock, Vanguard, Virtu, JP Morgan, Citadel's prime broker apparently is JP Morgan, and many more have serious exposure to Chinese companies that are included in executive orders. Those Chinese assets are being used as collateral by U.S. asset managers. In other words, once their billions of dollars in Chinese assets and collateral become worthless, along with the problems of over-leverage of trillions of dollars in derivative notions, an old friend of mine named Marge will be making a surprise appearance, and she wants her money. So here's some screenshots. Companies and derivatives. Oh, it's kind of hard. JP Morgan. Those assets and derivatives. Yeah, Bank of America, all that. Okay. So yeah, pretty interesting. So JP Morgan's number one, ranked number one, pretty high. Total derivatives is at 51 in the thousands, maybe. Oh. September 30th, millions of dollars. So $51 million, right? $1,000 million. Barclays, State Street, Morgan Stanley, Goldman Sachs. Yeah, Goldman Sachs is one that's saying today, meme stock trading is over. Everyone's sold. It's not true. I'm in. Going all in, right? Not financial advice. Pretty interesting stuff, guys, on Reddit. Yeah, retail is not going to sell. I'll do some research first. I'll take some meme stocks. Yeah, the SEC video is crazy. So Dave Lauer saying a year ago, I did AMA on Superstock, talk about market structure today. Meeting a case against, send a letter off against POFF and off exchange trading. They're counting us not to leave, not to have stamina. They're counting us to be frustrated how slow the process is and not to be organized and persistent. We won't let that happen. I'm here for the long haul. I hope you are too. Yeah, Dave Lauer is pretty cool. Here's a video from the SEC.
Welcome back.
Trying to get you out.
I'm going to do some research first.
That person's a monkey too.
Ow. Brad, it's your investment.
I'll take meme stocks. Invest.
Oh, crazy stuff. And of course, they make fun of meme stock people, but not, Gabe Plotkin's hedge fund or Tiger hedge fund that recently went down by 50%. They should consult them. So, anyway, guys, pretty interesting DD. I want to go over quickly with you, and I'll see you in the next video. Bye.